Good morning, Axel Merk, President and Chief Investment Officer of Merk Investments. I took a break for several days and I thought, give me some feedback. Do you want to have these briefings daily or just once in a blue moon or once a week or whatever it may be? In any case, today's Friday and markets up, markets are down, and so forth. Bonds are, as I speak here, the 10 years at 62 basis points. And so that really hasn't moved much all year. We've been talking about how maybe we have a march towards zero, maybe not. But real rates have, in this context, been low, and that, of course, has been supportive for the price of gold. Gold is currently at 1808, up 1126 for the day, or 63 basis points. More broadly speaking, the dollar has been weaker since March, really, and it's been highly correlated. A weak dollar has been correlated with risk assets, so a reflationary environment taking place. Today, the Swiss franc is the strongest in the major currencies. That hasn't been the case much of late. It's been more the commodity currencies. The weakest currency is the sterling today. At 125. And so if you haven't listened for a few days, because I haven't given a briefing for a few days, not all that much may have changed, right? What has changed is that the euro is at 114.32. That is up 40 basis points today. It's at the upper range of the G10 currencies. And we had a ECB meeting yesterday. It was followed by a press conference. There isn't much announced in these press conferences under Lagarde, it seems. One noteworthy thing is that they bake into their forecast that the EU summit that's only taking place today and over the weekend will find a way to provide presumably over 700 billion euros in stimulus to the European Union. And it's who knows whether that's going to take place. There are significant expectations. There is what is referred to as the Frugal Four EU countries that are pushing back against providing actual spending as grants to the weaker countries. And so odds are this may be a loan. If it does materialize, those sort of decisions need to take place unanimously. And with 28 countries, there always is a holdout somewhere. And everybody wants to put something into these things. And so, for example, some countries want to put in some constitutional protections, and Hungary, that's been the renegade there, doesn't like it. And so you need to get unanimity, and so ultimately everybody talks, and then you get some watered down version if you get one at all. But in any case, even the giving things as a loan would be a huge change for the European Union if indeed, which is expected, EU bonds are issued in return. That has not happened. There are all kinds of facilities, but true EU bonds haven't really been around. And so if those are being issued, that may be a start of, in the US, we call it make a more perfect union, right? Because there are some building blocks in the EU that prevent the EU from being the United States of Europe. And so the question is whether this is going to increase the spending power of the EU. And that, of course, if one thinks about whether Europe is a failed or successful project, we may like these developments or not, but you do need those institutional places in place for it to function more like the US. Now, obviously, many people say, hey, maybe it shouldn't function more like the US, and it's impossible with these different cultures. And not having this spending power at the EU helm is actually something positive. Well, it really depends on where you stand, right? I mean, if you believe that each individual country is responsible for their own destiny, then certainly, if you do believe that we got to help everybody, then you're on the other side of that camp. As far as the currency is concerned, the euro had shown stress when there was stress in individual countries, when others weren't helping as much. And just as a reminder, during the peak of the crisis, all kinds of facilities were put in place, but they came with strings attached. And it was very clear that countries didn't want to, and the logic was simple, right? If you need help with your budget, we'll give you money, but then we'll meddle with your budgeting. Well, the sovereign pride, if I may call it such, of these individual countries was sufficient, so most of these countries opted not to take on the help. And so that is and so those are the political realities. And the other political realities is when push comes to shove, central banks always kind of give in, and that's happened in recent weeks, of course, as well. Germany had always been pushing back, poo-pooing what's happening at the ECB, and then the Supreme Court, the High Court in Germany, said, "Hey, listen, guys, what the ECB does isn't right from the structural point of view, based on how we read it, and Parliament needs to give an okay for the monetizing of the debt." And they obviously don't call it monetizing of the debt; they call it credit easing, QE, and whatnot. But the German Parliament was a pushover and agreed. And so some people said it was a waste of time. It wasn't. It's again part of that institutional buildup of the EU. You need to have these sort of things clarified. And the path of least resistance is the money printing, is the money spending, and so that's been happening. But there's no guarantee it goes this way, and you do need to go through these exercises to make that happen. Now, talking about money printing, Pelosi yesterday said that praised that the money printing by the Fed has pushed up stock prices, and so that was an interesting one. She said it to pivot over to say that, hey, now we need to have massive fiscal support as well. And you may think again of money printing of what you want and so forth. I think the general trend is that we will have amazing fiscal support. Now, obviously, they'll bicker over the details, but I would think it's likely that whatever fiscal stimulus we have is going to get more into the hands of those that are actually going to spend the money and more directly spend the money. And the reason I say that is because Fed Chair Powell has said he's not even thinking about inflation, and I think that's a major mistake because the sort of policies we'll put in place are going to be more inflationary. Now, clearly, policymakers are saying, hey, inflation is a good problem to have if you do have it. I am not in that camp, but it doesn't really matter, and it really doesn't matter what they do. It matters what we do in the context of how do we react to it in our portfolio positioning. And we can't give here specific investment advice, and that reminds me that I should be giving you my disclosure. Here we go, so that I have done that as well. But as many of you are aware that we are quite active in the currency and then precious metals markets, and it's not that surprising that gold in particular has been popular. And it's not about what will happen, but it is about what investors anticipate what might happen. And that's a big difference because if there's a fear, a probability of something happening. The other one is, of course, that precious metals have historically been a diversifier in bear markets. Now, will we get a bear market? I don't know. We print a lot of money. And so maybe that's going to push asset prices higher. We've had in 2009 an amazing rally, and then the consolidation didn't look so great. Lots of reasons to be skeptical, and we continue printing money, and then over time things do heal underneath. Now, talking about healing, the virus situation doesn't look great in the US in particular. I'm based in California, where the numbers are not improving at this stage, and I'm trying to look at state-specific maps, which are a little bit more consistent. And actually, one county has just gotten a little bit better, San Bernardino County, so that's encouraging. But then more at the bottom of the Sierras, there are some regions, Stanislaus County, that's not been doing so great. That is a county where you have a lot of farm workers, and that seems to be where part of that concentration is. You have people that work in the fields and then live in close quarters, and so those folks get infected quite easily. The virus is spreading there, and so you do have that economic divide that somebody like myself, who is fortunate enough to live in my own house, a large house at that, that I have plenty of space for social distancing. I can work from home and whatnot, and so that's very different when you are a large family crammed in a small space. Very, very little you can do. And then, of course, a lot of it depends on the individual actions and just the way of a situation where in Southern California, yeah, people take their friends home and all that, and that's just not that good an idea if you do that on a bigger scale. And that's part of the reason why the virus doesn't get under control so easily. In the meantime, one of the airlines said, "Hey, we got to fly. We'll ramp up the routes." And so they just say, hey, if things don't work out, we shut it down again. In Europe, things are flying. In Greece, they are open for business. They're open to tourism for the UK, Greece in particular, the Greek islands. They um, tend to be flocked to by both British and German tourists, and so the Germans were a little eerie. Oh my God, the Brits are coming now because in the UK the numbers aren't as good as in Germany, but apparently the occupancy rate in those hotels is still in the teens, and so people don't go there in huge crowds. That doesn't mean you won't find something on TV probably where there's a crowd somewhere, but but many of these places are working very hard to attract tourists. Turkey is one of them. Not many people are going to Turkey at this stage, but they have very rigorous guidelines. And of course, if you think about rigorous guidelines, that means the cost of doing business is going up. Um, I live in Santa Clara County. That's where Palo Alto is, and there you have to, if you have your business here, you have to publish your COVID plan. It's going to be publicly available. Our office is located in San Francisco. Not that we've been there much of it all in recent months, but they have different rules again, and so you're going to have policies and procedures. And coming from a highly regulated industry, that's obviously nothing new. That we've been used to policies and procedures quite a bit. Then let me just make a comment about the election and look up here the latest numbers. Um, and I'm looking here at the predicted market. Who will win the 2020 presidential election? 62 cents on Biden and 32 on Trump and 39 on Trump. And so that one, and if I look at that trend here, that has somewhat, let me just see here. Yeah, somewhat normalized here. Obviously, there's still a lot of time until the election, so things could change. There's also this latest book out on Trump. Generally speaking, if there is some news that you want to get out, it's good to get it out early because then it's not all tagged by the time election comes in. The more important number, I think, is which party will control the Senate after the 2020 election, and then the predicted market. 64 cents on the Democrats, 39 cents on the Republicans. And so that had been in favor of Republicans several weeks ago, and so that's a huge shift. And at this stage, it's not expected that there's a filibuster-proof majority by the Democrats. And so, and if we do have President Biden, then he has said he's not going to get rid of the filibuster. So that's worth noting. And he presumably is going to be less extreme with executive orders. I say presumably because once you're in power, you figure out that that is a wonderful tool to actually get things done when you can't get anything through Congress. So back to the markets. I don't even know what I mentioned the S&P. S&P 500 was up 17, or is up 17 points as I speak here. That's the futures. The Dow just is dipped the negative. Looking at some of the rate markets, yeah, there were words out again on yield curve management. And for those of you who've seen some of my other public comments, I am not a fan of yield curve control. I think it's utter nonsense and stupid. And it just shows how the Fed is painting itself into a corner. So first of all, the 3-month 10-year steepness of the yield curve is 51 basis points. That means the 10-year is 51 basis points higher than the 3-month. It is 47 basis points between the 2-year and the 10-year. So the curve is very flat from 3 months to 10 years. And that's because of that forward guidance Powell has given that he is not going to raise rates until we're back at He doesn't say he said no QE and so forth. But it's all but expected that he's not going to raise rates until the economy is very strong again. Um, and and so but at the same and so that should be enough, right? But at the same time, they're printing a boatload of money, and so the reason and the justification for many of these programs is to allow a proper functioning of the market. Well, please help me, but I have not heard the definition of that proper functioning of the markets. And the reason why that definition would be most helpful is because then you know when that QE is going to be withdrawn or reduced or tapered, whatever you want to call it. Or the reason then, but fear not, I mean, central banks have an answer to that. They pivot over how low rates are just great for this economy. And it's not just Powell, it's not just the Fed, other central banks around the world using almost the same language because it kind of works and they haven't gotten much pushback. But it doesn't justify doing it to support functioning markets when you're not defining what functioning markets are. Sorry for repeating myself, but I just don't get it why people don't protest more and tell central banks to actually be honest and say what they do. Now, the context here is that they are spooked about a taper tantrum. They don't want to reduce the purchases because they think that that could cause havoc in the markets. So the geniuses that they are, they say, hey, what about yield curve control? Japanese have kind of done it. And what they realize is if we just tell people, hey, this is where we want the market to be, we don't have to buy as much. So this is their way of saying, hey, and I'm interpreting things here, but this is their way of saying we don't need to we don't need to buy as much. But if they were just intellectually honest and said, hey, this is the crisis, this is what we do in the crisis. If the crisis is gone, this is what we change. And yes, they do say, hey, if the crisis is gone, we kind of change it. But they don't define what crisis means. And so they don't define the path to get out of that crisis. So they just say we need this to have properly functioning markets. And to me, that's a tall order. We have the VIX at 26.92 right now. We have the markets up and up and up, not on all days, but on most days. And to me, I mean, they're not functioning because the Fed is distorting prices, I suppose. But other than that, they're functioning. And do you really need to push asset prices higher? I mean, Pelosi says it's a good thing. Others like it as well. But those are not good reasons. And then the truly bad thing about yield curve control is you draw red lines. And the moment you draw red lines, you're giving the market an opportunity to challenge it. Now, hasn't happened in Japan, and maybe it's not a fear, but if you believe that some of the items I said about fiscal stimuli might possibly be more inflationary, then it is conceivable that in 18 months or so, that it is an issue. Right, and then what you got to do? Now, central banks are not known to worry about the problem of tomorrow. They worry about the problem of today. So they might not give a darn about it. But intellectually, it is dishonest. It is dangerous, and so it makes no sense. If they just did the right thing, define what it is. What's the abnormal environment? This is the normal environment. And as we transition there, this is how we will transition. That is good. Now, the reason they don't want to do it is because their entire forward communication is about, hey, we'll print maximum and foam the floor so financial conditions are easy. That's the reason they don't do it. But again, the lack of intellectual honesty here is not good. And part of the reason this isn't good for markets either is because you do investing and markets are not about just having a feel great day for investors every day. It is about efficient capital allocation and propping businesses up in every which way isn't the right approach. You need to have a way of having the money go to sustainable businesses. Now, I understand that we have an emergency with the virus and the PPP program and whatnot, but in a crisis, even more so than any other time, the best short-term strategy is a good long-term strategy. And just because you can patch things together doesn't mean it's a good idea. Anyway, end of rant. It is Friday. Oh, one more comment. Wall Street Journal came out with an article saying that, especially on the East Coast, people are gobbling up vacation homes. and so they want to have the second home, and I think that's a because people were worried about a housing crash and so forth, and who knows, that may still happen in some areas, but I'm one of the fortunate ones who does have a place to go to on the weekends, and absolutely, it's a lifesaver when you are locked up all week in a shelter in place. You want to get out over the weekend, and so having your own four walls is much appreciated. So I can see how people are flocking towards that sort of thing. So be safe out there. And I will have these as frequently as people request when I have something important to say, or if I want to go off on a rant on something, I suppose. So with that, let me wrap it up, and everybody have a great weekend. Take care.